This is Rick Rule for Rule Investment Media and the Rule Classroom, sponsors of the 2025 Natural Resources Investment Symposium, held July 7 through 11 in Boca Raton, Florida, or via live stream from the comfort and convenience of your own home. A few things you need to know about the conference. The first thing is, over 4 days, we're going to present to you in excess of 50 hours of dense but valuable programming, more programming than you can absorb in the time that we have available to present it to you. To that end, the entire proceedings of the conference will be recorded, and whether you attend via live stream or live, those recordings will be available to you for a year, and you're going to need the recordings. Further to that, before the conference, we are interviewing every exhibitor at the conference and every speaker at the conference. This will allow you in the months preceding the conference to learn more about the exhibitors and the speakers and allocate your time and financial resources at the conference more efficiently. Two more things that I want you to know. The first is that every public company exhibitor at this conference has been vetted. Unlike any other financial conference that I know, if the public company exhibitors are not owned in accounts owned and managed by the conference sponsors, the exhibitor is not allowed on the exhibit floor. We turn down more exhibitors every year than we accept. So understand that every public company exhibitor is owned in our accounts. The consequence of that is that if you come to the conference live or live stream and you think for any reason that we haven't delivered value for money, we will refund your money. Unlike any other investment conference on the planet, there's an unconditional money back guarantee of your tuition. We look forward to seeing you there. You will get out of it what you put into it. Listen to these interviews, spend the time before you come to the conference, and you will get your money's worth at the conference. So let's start. Today, I have the pleasure of interviewing a gentleman who I have invested with for a very, very long time. Neil, thank you for your ongoing efforts on behalf of investors, particularly myself. And thank you, too, for your sponsorship and support of the Natural Resources Investment Symposium.
Thank you, Rick. Pleasure to be here.
Tell me something about your background to make people care about your answers to the nosy questions that'll follow.
Okay, my background is a financial background. Started off accounting, went into metal trading, went into investment banking, and about 35 years ago, started up my own financial advisory business advising mining companies on original things we were offering was access to project finance so they could start constructing mines. My first client was Beamer Clive Johnson. My second was Ian Telfer. My third was Serafino Iacono. So I go back a long way with some of the people from the industry. We developed the business over a period of time, and we got more involved in M&A. And about 20 years or so ago, I teamed up with Frank Giustra, who brought in his background from the mining equity side. And we ran a fund in one stage. At the beginning of 2008, the fund was worth about 300 million. But with the market collapsing, we ended the year as a public company with only 100. And that was because we couldn't sell our clients as financial advisors in a falling market. We decided we ought to readjust our business and decided that we've been involved in formation and development of so many mining companies, we should do it ourselves. So we essentially transferred Endeavour Financial into Endeavour Mining and started acquiring mining opportunities and projects in West Africa. A good area to start, good assets, good quality assets, underdeveloped. And over a 6-year period, we built Endeavour Mining up from the original $100,000 to $2 billion. We brought in a strategic investor, Naguib Suarez, and he took over the company, and I think it was worth about $2 billion at the time. It's now running at $6 or $7 billion, so they've gone on and done a superb job. We then decided that we would do it again. At this time, we acquired Los Filos mine from Goldcorp, and we acquired 3 mines in Brazil. And again, we built that up into a good-sized operation and merged that with Equinox. And finally, we decided that I would have one more go at it, and we created Aris, which in Celtic means again. So we're doing it again, certainly in my case, as I say, for the last time. We've now done this by acquiring 2 operations in Colombia I think that Colombia offers an absolutely fantastic potential for gold mining. 300, about 85% of the gold produced is illegal. It is very much underdeveloped. There are very few 43101s rolling around in Colombia, but there's an awful lot of gold coming out. The industry has not been very supportive, but we think if you can work within the government environment, which we have certainly been able to do so far, the opportunities are fantastic. So we currently have 2 mines in Colombia, one producing small mine, which we're developing, producing 25,000. The other one, Segovia, producing about 200,000. We are currently expanding both, so we expect to be at about the 500,000 range within a couple of years from now. So that's the story to date, and we'll carry on developing it the same way we develop the other companies that we've run. We have the same management team throughout most of the companies, so we have a strong, solid base. We also have the cash and access to additional cash that we're generating to finance the expansion to 500,000 ounces over the next couple of years. That, Rick,
let's go a little deeper into this, Neil. Tell me something about the reserves and resources at each operation.
Well, I think one of the startling things about this, when I compare it with the previous operations, is the quality of reserves, resources, and mine life is there. At Marmato, 6 million ounces M&I at 3 grams, but at Segovia, 3.4 million M&I at 16 grams. We're mining very nearly at 10 grams now from Segovia. So good cash-producing asset. Segovia has been a very, very good cash-producing asset. And that is one of the reasons we're taking it from 2,000 tons a day to 3,000 tons a day. We started this 6-9 months ago. The construction will be complete. It's scheduled to be complete next month. It is on schedule. So we'll have the capacity from going from 200,000 ounces a year to 300. But we have to do more development work. We have to encourage some of our small miners to produce more and increase the small mining component. But we expect to be capable of having a run rate of about 300,000 ounces round about the beginning of next year.
So if I understand in summary, you are 2 to 3 years away from being a 500,000 ounce producer from almost 10 million ounces in measured, indicated, and inferred reserves and resources. Tell me how much I'm paying for this. What's your market capitalization? And how much cash do you have? What is this financial runway to the success that you're talking about?
Okay. Cap, I regret to say, is only about 950 Canadian, 950 million Canadian. We had at the 31st of December, $253 million in cash. Our expansion at the lower mine at Marmato, which is underway, is about 365 million. We've spent 75 of that. We have 290 to go. We are receiving about 80 from Wheaton. So our net financial requirement to bring a mine up to about 200,000 ounces at Marmato is just over 200 million. And we are generating significant all-in sustaining margin at Segovia. If you look at our forecast for the year, which is 210 to 250,000 ounces for this year, if you look at it, the sort of midpoint, 230, and you look at it, gold at 260, 2,600, where we budgeted, we have an all-in sustaining margin of about 213 million coming from Segovia. If you look at today's prices, it's much nearer 300 million. So we're in a very good state from a cash generating point of view, and we also have the cash to be able to fulfill our requirements of the expansion at Marmato, which I say is about 300 still to be spent, and we have about 10 still to be spent in the next couple of weeks or so at Segovia. So all expansions fully financed.
And one would assume, given your background at Endeavor Financial, to the extent that you needed to arrange construction financing for these 2 deposits, they sound pretty easily financeable on a project basis.
Certainly Segovia is very easy. It is up and running now, producing 200,000 ounces. The expansion is technically over. It's there, demonstrable, not an issue at all. Marmato has the same project risk that any new mine has. Until you've built it, you haven't built it. But all the expertise is there, so that should not be an issue. No, I mean, certainly we could leverage Segovia.
I would ask the audience to remember that arithmetic. At current gold prices, you're talking about a run rate close to $300 million annually, with $250 million cash in the treasury. The ability to take production from its current 200 to 220,000 ounces a year up to 500,000 ounces a year against 9 million ounces of measured, indicated, and inferred, and you're paying 900 million Canadian dollars for that. Subtract out the 250 million in cash, and you get an enterprise value that strikes me as being fairly attractive relative to the price of the assets at hand. Neil, thank you for your efforts on behalf of mining investors for all this time. Thank you, as I said, particularly for your efforts on my behalf. And thank you, too, for your sponsorship and support of the Natural Resources Investment Symposium. I look forward to hosting you in Boca Raton.
I look forward to that too, Rick. Thank you very much indeed for the opportunity. Much appreciated. Cheers.